Now, I can't speak for everyone, but one of my biggest reasons for starting my dividend growth investing journey is to get to the point to where I'm earning enough in dividends on a consistent basis to have enough cash coming in to cover my bills and maybe even a little bit left over after that. Because you see, at this point, money and work no longer hold the same meaning, as I would consider this situation true financial freedom. But can you retire just off of one simple, straightforward dividend growth ETF and get to the point to where you can live off the dividend income comfortably? Well, the answer is absolutely yes. And in this video, I'm going to show you exactly how anyone can do this with just $50,000 invested into this incredible dividend growth ETF. Now, we're going to go through all this. Right after you, please drop a like in this video and subscribe if you're interested in content like this. Now, the ETF that we're going to be using for this example is none other than the Schwab US Dividend Equity ETF, or ticker symbol SCHD. Now, this ETF strategy and objective is pretty straightforward. The investment seeks to track as closely as possible, before fees and expenses, the total return of the Dow Jones US Dividend 100 Index. To pursue its goal, the fund generally invests in stocks that are included in this index. The index is designed to measure the performance of high dividend yielding stocks issued by US companies that have a record of consistently paying dividends, selected for fundamental strength relative to their peers. Based on financial ratios, the fund will invest at least 90% of its net assets into stocks. Now, some more highlights about this ETF: a straightforward, low-cost fund offering potential tax efficiency. The fund can serve as part of the core or complement in a diversified portfolio, tracks an index focused on quality and sustainable dividends, and invests in stocks selected for fundamental strength relative to its peers based on financial ratios. Now, looking a little bit deeper into this ETF's performance, as far as ETF price alone in the max time frame, since around 2011, this ETF is up around 182.81%, and this is not dividends included. The 52-week range for this ETF is 65.96 as of the low and 79.49 as of the high. The expense ratio for SCHD is just 0.06%, which is pretty close to just about the lowest expense ratio you're going to find on the market when it comes to high quality ETFs. Now, the fund does pay a nice juicy dividend quarterly, which we're going to look at here in a second. And the assets under management for this ETF is $48.77 billion. Now, like we kind of touched on earlier, this ETF does have a very specific method on how to pick the stocks within the ETF's holdings. The current holding breakdown is industrials at 18%, healthcare at just over 16%, financials at almost 15%, consumer defensive at 12.6%, technology at 12.14%, energy at 9.6%, consumer cyclical at 9.5%, communication at 4.3%, basic material just under 2%, utilities and cash just under 1%. Now, this fund normally holds just around 100 different stocks within its basket of stocks, and the stocks within this portfolio are going to change on a consistent basis, normally once a year. But the top 10 holdings as of right now for SCHD are companies like Amgen, Cisco, abbvie, the Home Depot, Broadcom, Coca-Cola, Merck, Chevron, UPS, and Pepsi. Now, again, all the companies within SCHD do pay a nice solid dividend, and on top of that, a lot of the companies have some pretty impressive dividend growth. To look deeper into that, we see that SCHD has a current trailing 12-month dividend yield of 3.54%, which is not a bad starting dividend yield at all, considering the price appreciation historically for this ETF. So for investors buying into this ETF, they are not only going to expect the potential for some price appreciation for this ETF long term, but also a nice starting dividend yield that's going to pay a decent amount of cash flow right off the bat. Now, the trailing 12-month dividend growth rate for this ETF is 7.13%. Now, in my experience, a dividend growth rate of anything over 10% is pretty exceptional. So even though the trailing 12-month dividend growth rate is under 10% as of right now so far, the 3-year, the 5-year, and the 10-year paint a very different picture. SCHD's 3-year dividend growth rate is around 12%, the 5-year almost 14%, and the 10-year over 11%, which means, historically speaking, this ETF has consistently paid more and more dividends to their shareholders over the last 10 to 14 years. Now, to be more specific, just around 10 years ago, September 22nd, 2013, SCHD paid a dividend of 23 cents per share. Now, fast forward 10 years later, SCHD is paying anywhere from 60 to 70 plus cents per share per quarter. So in the last 10 years or so, the dividend has nearly tripled, paying investors much more in the form of dividends for their exact same investment. Now, to go back to the title of the video, I said that buying $50,000 into this high quality dividend growth ETF could allow any everyday investor to retire off the dividends forever. Now, to figure out if that's actually possible or not, we're going to need to head over to the dividend calculator. Now, for the dividend calculator, we are going to have the distribution frequency as far as dividends paid set to quarterly, because that's the frequency that this ETF pays. Next, we're going to have DRIP turned on because this investor, in theory, will be reinvesting all their dividends back into more shares of SCHD up until it's time to retire. The starting principal is going to be $50,000. Invest it into SCHD, the annual contribution from there is going to be $0 more. So simply put, in this example, just imagine that an investor buys into SCHD, $50,000 worth, never contributes another dollar, and just lets the dividends reinvest and do their thing. The initial annual starting dividend yield is 3.54%, which is the trailing 12-month SCHD dividend yield that we're currently working with. The expected annual dividend increase, we're going to go with 10%. It could be higher, it could be lower. And the expected annual share price increase, we're going to go with 6%. 30 years invested, let's see what we get. So the very first year, $50,000 invested into this ETF would generate around $1,800 per year in dividends, which honestly isn't all that shabby. The reason it's actually pretty decent is because, of course, SCHD does have a decent starting dividend yield of 3.54%. But by year number 2, we're already up to $54,500, over $2,000 per year in dividends already. And once again, this is just with no contribution added and dividends just being reinvested. By year number 5, this investor is already up to $71,000 worth of SCHD and almost $3,000 per year in dividends. Now skipping a few more years, by year number 9, this investor already is over $100,000 in theory, just going off this math, and $5,000 per year in dividends. By year number 15 and on from there, the numbers are going to start to get bigger and bigger, and the power of compounding is really going to kick in. Now, if you're not aware, the power of compounding is essentially an act of adding interest on interest. The amount of money you invest will generate earnings from both the initial principal and the accrued earnings from potential compounding periods. Eventually, thus, over time, the power of compounding helps grow massive wealth as long as an investor stays invested long enough. So by year number 20, this portfolio is at $325,000 in principal and $23,000 plus per year in dividends. Now, by 20 years in, this investor still does not necessarily have enough to retire off of because, let's be real here, $24,000 a year in dividends is great, but it's not going to be enough to live off of. But by year number 25, just the $50,000 invested, dividends reinvested turned on, and letting SCHD do its thing. This investor is almost at $600K worth of SCHD and $52,800 per year in dividends. Now we're getting a little bit closer. Finally, scrolling all the way to the bottom, 30 years invested, $1.1 million plus into SCHD, and now we're over $124,000 in dividends per year. Now, obviously, we don't know what the cost of living is going to be like in the future, but generally speaking, just off of an initial $50,000 investment, $120,000 plus per year in dividends really isn't all that bad. So there's the exact math on how a $50,000 investment into the SCHD ETF could turn into massive amounts of dividends long into the future. Now, of course, one of the whole keys here is the fact that the investor would need a lot of time to let the power of compounding do its thing. But for generally younger investors out there that might be in their 20s, 30s, or maybe even 40s, time is definitely on your side. And if you want to retire with a massive amount of dividend income, there's tons of different high quality investment vehicles out there just like this one. But I want to hear from you guys down below. How much dividend income on an annual basis is your goal to have when it comes to retirement time? If you enjoyed this video, make sure to please drop a like down below and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.